Okay, welcome back for those of you who are returning and for those of you that are brand new to the series. This is video number 1 and it is investment basics. We want to start out today by talking a little bit just about how investments work and how the investment advisors work, their whole role in the process. And the first question that we have to ask is your broker making you broker? Has someone named Madoff made off with your money? And if they have, then this is a series for you. And if they haven't, it's still important to watch this series because you're going to find out some things from the sergeant level. My background in the Marine Corps is 22 years. I retired as a gunnery sergeant. So we're going to explain things at the 1, 2, 3, 4 level that even a Marine can understand. We'll begin today in our series talking about how the market works and the different investment options out there today. And the first thing we have is the stock market. Everyone's familiar with the stock market. There are 2 ways you can invest in the stock market: buy stocks directly or buy through some type of a fund. And typically you'll have the Vanguard funds and all these other different kinds of funds that are in your 401k if you have a 401k. Or you can go to some place like E-Trade and you can buy into a fund or buy stocks directly through them. So stocks are one way that you can invest. Another way is bonds, and bonds are kind of the opposite of stocks. When bonds are up, stocks are down. When stocks are down, bonds are up. And bonds are a way typically for companies and for municipalities to raise money. For example, Dallas, Texas might need some new sewer pipes somewhere in the city. So they'll say, we'll put out a $5 million bond project, and they'll actually sell these bonds. And it's similar to savings bonds. They call them munis or municipal bonds. And people will buy these bonds at a discounted rate, and then when the bond comes due, they get paid the total amount. For example, you buy a bond for $50, and when it comes due 5 or 10 years down the road, they pay you $100. So you're buying it at half price, holding it till it matures, and then you get the full amount. Then there's gold. I'm sure we've all seen the commercials on television for gold. Buy gold now. Even my hero, the G-Man, G. Gordon Liddy's out there hawking the gold. The reason that they're selling gold is when the stock market's down, gold is up. When gold is down, the stock market is up. There's a relationship there. So the first point for everyone to understand is the stock market goes up, the stock market goes down. Gold goes up, gold goes down. That's just the way it works. In our next series of videos after this, number 2, we're going to go into a little more detail about exactly how stockbrokers work, how they make money, how E-Trade makes money, and we'll give you a couple of tips on what to look out for, the challenges and the pitfalls of that type of investing.